Hey, what's up, Market Moose? Mike from the Moose on the Loose. How are you this morning? This week is what I will be calling the Brookfield Week. So last Thursday on the YouTube channel, I have recorded a kind of like a complete overview of the Brookfield family. So we covered Brookfield Corporation, asset management, infrastructure, and renewable. And this week, we do have earnings coming from all the family. So it starts on the 5th with Brookfield Renewable, and then on the 7th, we'll have infrastructure and asset management, and the week after, on the 13th, it will be Brookfield Corporation that will close the loop. So what I decided to do this week is actually giving you a little bit more insight on how to analyze each of them, as you will be reviewing their quarterly earnings in a few days. If you want to know more about the Brookfield family, I do have created a complete guide so you can understand which one is the best for you. So you can download it at dividendstocksrock.com/Brookfield. dividendstocksrock/Brookfield. So today we're starting with BN and BAM. So Brookfield Corporation and Brookfield Asset Management, they are definitely not the same. Just to give you an example, year to date for Brookfield Corporation is roughly plus 17%, including the dividend. And BAM is at minus 1.5, including that juicy 3% yield. Another distinction that is really important to understand is after the spinoff of BAM, BAM has absolutely no debt and pays a higher yield. So we're talking about 3%, while Brookfield Corporation is invested a little bit more in everything, carry down the debt, invest its own capital, and offer a yield of 0.5%, but technically offers a little bit more growth potential down the line. So there are a lot of confusions about their structure and how they operate. Let's put it that way. So the first thing is, when you will be reviewing the quarterly earnings, do not really look at revenues. They're not that interesting. What's really interesting and what to analyze is actually the distributable earnings. And of course, it brings even more confusion because instead of looking at classic earnings, you're looking at an homemade calculation. So some modification to tell you what is distributable among the earnings per share. The other thing I want to highlight as well is sometimes you're going to read press releases or news that will tell you that Brookfield Asset Management is acquiring or in a partnership in an infrastructure or a renewable energy power plant, but they are the operator. They're not the owner. So sometimes it feels like it should be Brookfield Infrastructure or Renewable that owns this asset, which is usually the case, but the operator will be asset management. So slight difference here, but this is key important because if you're just the operator, you are generating profit from the operations, but you're not taking any risk along to the debt to purchase the asset. That is like on a different level where we have Brookfield Infrastructure and Renewable that will do asset recycling. So acquiring those assets, using their capital from the funds they receive, and then selling it at a profit. So while BAM is just charging fees on the assets under management. The other thing that could come with some confusion in regards to Brookfield is sometimes you will see this, especially when the market goes down and there's like an economic slowdown. We saw that a few years ago when interest rates started to go up in 22. There are some big properties with a large mortgage, and then you will see that headlines, oh, Brookfield cannot pay anymore. They're giving the keys to the banker. And they actually do that, which is maybe not the most ethical way to do business. I'll let you be the judge of that. But what they do is when they mortgage a large property under Brookfield Properties, they do non-recourse debt. So that means that if there is a problem, it's the debt is only linked to that asset. So Brookfield doesn't really mind to just give it back away. But the banker cannot go after other Brookfield assets to get paid. So again, it can lead you to think that Brookfield's having a lot of problems, but literally they're just saying, you know what, this asset is not worth our time. It's losing money. The cost of operation is way too high. We just decided to let it go. So that's how they operate. Now I want to highlight some of the risk for both Brookfield Corporation and Brookfield Asset Management. I told you long enough about the complex structure, but there are other type of risk, and this is what's important to understand when you analyze quarterly earnings. The two major things that could affect the stock price and the business overall is definitely the overall market. So when we are in a down market, of course, all kind of assets manager are going to take a hit. They're taking a hit because they have more difficulty to raise funds. They're taking a hit because most of their revenues are coming on the fees they are charging on the assets under management. So when the market goes down, the assets under management goes down as well. It's harder to raise funds, so it's even harder to show growth, and therefore the revenue and the earnings will go down. The other downside for the type of investment that Brookfield does is it's usually less liquid. So if people want their money back, but you have invested in electric power plants, in railroads, in ports, or other type of large infrastructure, those infrastructure requires patient capital, not the other way around. So when there's a panic attack on the market and then people start selling, it's going to take a harder hit for them because it's going to be more difficult to find the cash flow to pay the investors back. Finally, since they operate across the world, they also face several political and regulator risks. So if there's any regulators changing or the politics is changing in a specific country, they will have to deal with the consequences. Now, to end this show, I want to give you a few tips on how to read the quarterly earnings for both Brookfield and Asset Management. Again, if you're wondering what's the difference between both, if you want to learn more about them or any of the Brookfield family, I invite you to download the Brookfield report inside out at dividendstocksrock.com/Brookfield. So how should you analyze the Brookfield reports when the dividend triangle is not that important here? So the revenue trend will not work. The earnings per share is not exactly what you're looking for. And on top of that, all Brookfields are paying their dividend in US dollars. So if you have the Canadian side of the ticker, well, then you're going to see some fluctuation in your dividend payment. So there are three major things you want to look at in their quarterly press release. The first one, as I said before, the distributable earnings. Distributable EPS, earnings per share, will tell you if the company has enough to keep on paying their dividend. Probably not going to be very worried about this quarter. Usually those type of companies are able to grow high single digit to double digit year over year, so it should be good news. Once again, the market is relatively bullish. There's a huge demand for infrastructure and for energy, so once again, I'm not really concerned about this part. The second part to analyze is, of course, the management fees that they are charging on their funds. So we're looking at assets under management. Net inflows is super important because it will tell you if the company is able to get more investors on board, so receiving in cash flow to build funds and to invest, instead of just having the assets under management going up naturally because the market is going up. So what you want is positive net inflow, so everything that comes in versus everything that comes out at the end of the quarter. Finally, the last thing is to look at the ability to raise funds. So you basically make money just by charging fees. So the fluctuation of the assets under management is super important. The higher it is, the better it is, the more money they make, and technically you should be able to get a dividend raise every year if all things remains the same. So, right, Moose, that's enough for today. Tomorrow, we are going to attack Brookfield Renewable because it's going to be one day before they release their earnings. I'm going to give you a little bit more tips on how to analyze it. We're going to do a deep dive. And again, if you want to have the complete overview, go at dividendstocksrock.com/Brookfield. All right, so we're going to talk again tomorrow. And until then, don't forget to stay invested.